NFTs or non-fungible tokens had a breakout year in 2021, but apparently so did NFT scammers. The NFT market got a hefty blow earlier this month when NFT analytics site CryptoSlam found that traders on a fairly new NFT marketplace named LooksRare were manipulating the platform's token-based reward system via a common manipulation tactic known within the stock market world as wash trading. Simply put, wash trading is a way through which scammers artificially inflate the prices of their NFTs, and LooksRare isn't the only platform where this is happening. ब्लॉकचेन डेटा प्लेटफॉर्म चेन एनालिसिस की 2021 की खोज में पाया गया था कि करीबन 110 NFT ट्रेडर्स ने कुल मिलाकर करीबन 67 करोड़ का फायदा वॉश ट्रेडिंग के जरिए कमाया था. Experts claim that this could have a detrimental effect on the NFT market in the long term while also stunting the trust people have in NFT marketplaces. So, in this episode of Crypto Unfiltered, I will take you through the process of wash trading and how it's been appropriated by scammers to manipulate the market. So, the next time you decide to buy or sell an NFT, you know how to call a scammer out. We've talked about wash trading being a manipulation tactic, but let's first break down what wash trading really means, especially in terms of how it applies to the stock market. When traders engage in a wash trade, they buy and sell securities to create a misleading market signal. When traders and brokers conspire, they can make wash trades. Investors can also make wash trades if they act as buyers as well as sellers. To understand this better, in the context of NFTs, wash trading is the process of raising the price of an NFT when one person is selling in between two of his or her own digital wallets. मतलब एक इंसान अपनी NFT को ही अपने आप को बेचता है उसका दाम बढ़ाकर, जो कि उसको रेगुलर मार्केट में जो प्राइस मिलेगा उससे ज्यादा, जिससे ये लोग किसी और को वही NFT ज्यादा दाम में बाद में बेच सकते हैं. There is a lack of regulation in the NFT industry, and because many NFT exchanges only require buyers and sellers to connect their crypto wallets and not identify themselves, scammers feel they can get away with it. But not all wash traders are profiting, as highlighted by Chain Analysis in their study. Apart from the 110 users that cumulatively earned millions from the practice, the blockchain analytics company's report also identified 152 users whose profits from the scam weren't even enough to cover the gas fees charged by the NFT trading platforms. Now, gas fee comes from transferring an NFT from one wallet to another. In fact, those 152 accounts lost about 3.12 crores combined. In short, only a few big players are bringing in substantial profits from this practice. The NFT market at the moment is vulnerable to such illicit actors, and in the absence of a crackdown by either regulators or NFT trading platforms, the number of wash trades continues to be an area of concern for the NFT market. So, is it impossible for traders to know if they're being duped? No, not really. Through blockchain analysis, a user can track NFT wash trading by looking at sales of the digital tokens to the addresses that were self-financed, that is, being funded by the selling address or an address that initially funded the selling address. थोड़ी मेहनत initially आपको करनी ही पड़ेगी, but at least you will be safe from scammers. The call for crypto regulation may have come late, but it seems regulators could come up with their first global framework of rules within the next few months. The Financial Stability Board, which groups regulators, central banks, and finance ministry officials from the G20 economies, is looking at what needs to be done with cryptocurrency assets such as Bitcoin and stablecoins. The European Union is approving a comprehensive set of standards for authorizing and supervising participants in cryptocurrency asset markets, and we could see a lot more countries follow these standards to regulate the crypto market. Also, the Russian government also appears to have reached an agreement on how to regulate Bitcoin and other cryptocurrencies in a plan to recognize crypto as a form of currency. The agreement marks a significant U-turn after the Bank of Russia only last month proposed banning miners and several other crypto operations over concerns that they could endanger the country's financial system. अब बात करते हैं CBDCs की फुल फॉर्म। IMF, जिसे हम इंटरनेशनल मॉनेटरी फंड के नाम से भी जानते हैं, उनका मानना है कि डिजिटल करेंसीज में काफी इश्यूज हैं, जैसे कि उनकी बेस टेक्नोलॉजी और फिएट मनी और उसके डिजिटल वर्जन के बीच जो टेंशन है वो भी एक प्रॉब्लम है। लेकिन IMF का ये भी मानना है कि CBDCs इज द फ्यूचर ऑफ मनी एंड जिस तरह ये मार्केट में आएंगे उतने ही वो सेफर ऑप्शंस भी बनते जाएंगे स्टेबल कॉइन्स की तुलना में। In India, a lot appears to have happened within the crypto space. India-based Ethereum scaling and infrastructure development platform Polygon grabbed global headlines for raising a whopping $450 million, that's roughly 3,364 crores, in its first major financing round by these investors. Polygon claims that the money will allow the team to help scale Ethereum and accelerate the mass adoption of Web3 applications. The price of Bitcoin fell sharply after Russian President Vladimir Putin went on television to announce a special military operation to complete the demilitarization of Ukraine. While Ukrainians and world citizens have more pressing concerns than the price of cryptocurrency at the moment, markets are a way of quantifying anxieties given Russia's importance to the energy sector. According to data from CoinMarketCap, the total cryptocurrency market cap has lost roughly 5% in the last 24 hours alone, bringing it to 1.6 trillion US dollars. Much of those losses came in the immediate run-up and aftermath of the invasion. At the time we are recording this, Bitcoin is currently 49% down from its November all-time high, as it compounds the 21% it has dumped over the past 7 days. The world's leading cryptocurrency is playing the Pied Piper again, as all of those below it have tanked even harder. Ethereum has shed a painful 12% on the day, with ETH prices dumping to $2,321. This is the lowest the asset has fallen since exactly a month, and it is on track to drop to a 7-month low should the fall continue. Barring stablecoins, the early Thursday crash following the Russian invasion wiped out all the gains from the top 30 coins in terms of market cap. In fact, most of the coins that make up the top 12 have been upwards of 25% in the red over the course of a week. Metaverse tokens and meme coins haven't been spared either, with Shiba Inu, Decentraland, The Sandbox and Axie Infinity all marking losses in value by over 30%. Meanwhile, it is just not cryptocurrency markets that have shaken. Today, the US stock markets resumed their descent into correction territory, with the Dow Jones average falling near 2%. Asian markets, which were open at the time of Putin's speech, are also reacting. The Nikkei is down by 1%, while China's Hang Seng Index is down more than 2%. It's the breaking down the numbers segment, where we update you about how some of the major tokens in the market are performing, because you need to track their performance as well. If we look at our crypto tracker for the week, we can see that Bitcoin is down by 8.82%, while Ethereum has also suffered a slump of 12.42%. Tether is just slightly in the green zone with a 0.95% rise, while Ripple, Cardano and Solana all suffered slumps. There is a lot more crypto gyan coming your way in the week, so stay tuned to the show. That's it for Crypto Unfiltered for this week. If you have any questions, do send them across to us on our Twitter or Facebook pages, and we'll have an expert answer them for you. This is Cyrus John signing off with a promise that I will be back with more crypto next week. See you soon.